Basile, also known as the Fib Stalker, and welcome to this weekly review. This is the weekend video review for Forex majors, the SP 500, dollar index, gold and silver. This is part 1, and it's part of the Fib Stalker analyzing trading service for the week starting June 24th, 2018. Alright, so before we start, as usual, if it's the first time you are reading this, watching this video, please pause the video here and read the usual disclaimer. Past performance is not indicative of future results. Trading Forex carries a high level of risk and may not be suitable for all investors. The speaker and author is merely providing this material to you for your general information and education. Now, before we get into it, into the analysis, please review the free package to learn how to trade like modern algorithms that I'm offering on my website. You can go to fibstalkertrading.com, fibstalkertrading.com/free, and you can get the access to the free package to learn how to leverage algorithms in the modern market. You'll get an ebook, a video course of 6 hours on these techniques. And if you want access to the signal service for 1 month, you can get that for free. And also, I also have a mastermind on Facebook. It's a closed group where we look at Forex, stocks, and commodities. If you are interested, you can go to www.fibstalkertrading.com/Facebook. All right, so let's get into it. And I'm going to start from the ESP, the ES here, the SP 500, and I trade and look at the futures here. You can see the continuous contract for the SP 500 mini futures. And for those who follow me, know that we have traded 2534. This is an extension long. We never traded 2485, so we never know, that could be in the cards. If that trades and there's participation around that level, that'll be a good base, a good base to see this market trading into higher highs. Of course, the interest rates are going higher, but it's not always that linear with the market, so we don't know whether that's enough to stop this bull trend that we have. For sure, here we have on the daily a sequence of measured moves, and recently the 50% at 27.37 here has been tested back last week, and this week it could be retested again. Remember always that second tests are dangerous tests, so we could see the break of the level. Now if 27.23 breaks, then it is very possible for this market to make a larger retrace into the 26.75. Okay, so break, and we likely gonna get an opportunity to short this market into the 26.57. When we look at the 4-hour time frames, the market came back to trade the 50% short here. That was did not hold, has not held before here last week, 27.73, but this week and on Friday this has been holding here and has the potential to keep pushing this price into the two targets, 27.21, 26.98. All right, so this is for the SP 500. Of course, as we trade, as I trade a lot Forex, I like to look at the dollar index, but the dollar index is important for many markets, and so we follow it closely here. So on the weekly, we had this participation at the 50% long, as we can see here, and that was the main reason this market has held around 89.10 and continued higher. As you know, in the last few weeks I was looking for a deeper retrace here in the dollar index that never came. The index continued higher from a higher anchor here, and that's what we have to have on our screens at the moment. That what has traded, and price made it into that first target. So this market could actually retrace 90% of the previous move now and still be in a long. So I want to have that 93.27 on the charts here, and at the same time we have to understand what could happen here. So there is a 50% here that if it holds, it could be the reason for this market to continue. That has not been tested yet. That's the 94 level. If this level holds, the market reverses, we continue higher. If the 93.71 pierces, we can go down to 93.27, and then we'll need to assess what can happen in this market. Gold and silver, of course, they're moving lower due to the strength in the dollar index. Now gold, we have very clear levels. We had them since some times, and particularly the 27, 74, 73 here. This has been tested once, twice, and it has the possibility now to, and there is the possibility now for that level to be broken. If that happens, we could see this market continuing lower, possibly into previous lows here, and even the lows in 2016 here at 11.22. So it all depends on what the dollar index is going to do. All right, and silver has been forming a base here for a very long time. Now silver has a short in 1912 with a target in the previous 2016 lows here, and it also has a daily setup short here. It was not respected at the beginning of 2018, but it was respected in April, and that is also pushing this price lower. Now that said, the move in silver has been much more limited here, price much more compressed, but this could also revisit the 1487. In terms of setups, I don't like the lateral action here, and I'm just letting this market move. I'm not involved at the moment. All right, so let's start from the majors then, and I'm going to start from the euro dollar here. So the euro dollar on a very large time frame here, it has a 50% short that came into play in here at the beginning of February, and then eventually the market gave up. Okay, there was also a sequence of measured move longs that actually failed. The anchor used was this one, from highs to highs, participation at 115.53, price into the first target, and the next measured move has failed recently after this big move lower. So in a way here, the shorts in this area, in the 121.82, starting from this level, the area short starting from this level have been confirmed, and recently this market has also traded a short level, and if that level is revisited here, I'm talking about the 118.36, that could be an opportunity for a short. And another level we have to watch is the 50% short from recent highs to lows, and as you can see, that is has been in play on Friday. It actually has traded on Friday, has been tested successfully. The high was 116.76, and the 50% was 1680 for +1 pips. It applies, the rules applies. So if this is revisited and it holds, then this is going to be a short, but this market could continue lower from here as well. The Japanese yen, I have a little reminder here for myself. At the open here, I was watching the market and I entered short here, and then because I was not in the right state of mind and rested, what happened is that I just exited break even, and then the market started moving. So I just wrote this for me, just as a reminder, and for you as well, to be in the right state of mind, be relaxed. Today I didn't go to the gym before starting here watching the market, and I paid a little price here. I mean, this trade would have been risk-free at this stage, but I'm not worried because there'll be other opportunities. So let's look at the at this market here. This market is moving laterally between two clear areas here. One is highs to lows, and that's the 112.47, and the other one is on top of this 50% here, which is still holding, the other area is the lows to highs. Okay, so this market is moving between these two regions, starting at 112.47 and 108.76, and now seems to have resumed its move lower. The US dollar Japanese yen tends to move along with the SP 500, so if that moves, if this move continues, it's possible the move in the SP 500 also continues. Okay, of course you always have to study what's going on in the smaller time frame here. So let's look at it again. This market has traded an extension long after this huge move higher. We modeled it like this, and this level here, let me remove the warning here, this level here could come into play again in the coming days, actually this week. Okay, and but on the daily we also saw a sequence here, at least an attempt to start a sequence. The 50% has traded to the pip 109.19, bringing price right into that first target, and then the next measure move has initially held, and then it has failed. Okay, it held here initially, and then as you can see the 109.84 was placed on the downside, and the market started moving on the downside. Okay, it was not technical initially, but eventually it continued moving lower. So this market is moving lower. It's a confirmed move lower now, and whenever it gives an opportunity, if it's going to give an opportunity to trade now as a retrace, that retrace would be a short, that's for sure. So what I'm looking for here, if you're short in this market, should keep your shorts until we get into 108 for each, which is a second retest, second test of this 50% area, and then we're going to learn whether this market is going to continue lower here below 107.73. This market will be kind of in trouble here, because then the bulls here could lose this market again, and below 106.47 there's the potential to retest the 170. Okay, so if you're short this market, keep the shorts, because this could actually come to retest this area here, the 108.43 for a second test. Second tests are dangerous tests. US dollar Swiss franc is also putting here a reversal, and this market is doing that around the previous highs. This has been a large sideways move. If this continues, there's a potential to test the 50%, but because this is a range, I do not anticipate the 50% holding. Let's see what's going on the smaller time frame here. There was a beautiful sequence of measured move at the beginning of the year, which was respected here, and 1, 2, and 3, and then the market flew up, actually flew away here, and after that the extension that has traded comes from this high identified after the fact, not before the fact, after the fact, but this is still gives us information, because this level now in 98.11, it's important, it could be retested, so this market might be moving towards 98.11, and we could see this market continuing lower in the coming days here. It's kind of extended at this stage, and if it comes back, it could actually trade. Let's see if it has traded extensions here. This might be one of the anchor we have to watch. This market could continue lower, in which case this is going to become the anchor where we trade the next extension short. Okay, so that's what you have to keep in mind. Let's have a look at the New Zealand dollar and Australian dollar, the Asians here, and okay, on the larger time frame, the 50% short from highs in 2014 to lows in 2015 here has traded. This has traded last year, and since this market has been oscillating between the 50% short 75.22 and the 50% long 68.48. Okay, That high was never retested recently this year, while the lows has been retested twice, and the last test, the third test here, came last week. So far this has been holding, but if the 50% here, the algos at the 50% here do not show any more power here and willingness to hold this level 69.45, we're going to see a continuation lower and below 66.93. You can kiss goodbye this market, because the larger time frame here has targets in the 55.93 area. Okay, so that's sizable. It's talking about 1400 pips here that could be consumed in a matter of months. Of course, this is not going to happen quickly. On the daily, we are seeing an extension short, notable anchor here from lows to lows that is trading and pushing this price lower. So there is a setup here already that has the potential to push price from 69.23 into 68.46. If you are short this market, keep the shorts. The short has actually traded at the open here, and you could retest the 68.46. Australian dollar, US dollar, very similar situation, but the Australian dollar is much weaker, and it reflects a little bit the weakness in China as well, when China's cough as the flu, and everybody else in Asia, particularly Australia, do suffer. Now when we look at this market here, the 50% long has held for the first time here in May, and is still holding here the 63.30. 63.30 here was not pierced on the downside yet, but eventually I believe that's gonna happen. There is a short 76.65, and this could actually keep pushing this price lower. On the daily here, there is an extension trading, which is the setup here is similar to the setup we are seeing when I remove this horizontal line here. Is similar to the setup we're seeing on the New Zealand dollar, US dollar, and it's lows to lows, but the anchor is not this anchor here. So they're using a more recent anchor here. It's the low to lows here that is traded on Friday, and the open here is showing weakness. This is an extension, so you know, if this market continues lower, it might not still be ready to do that, but eventually, you know, I believe it's gonna move lower. Of course, we don't know, but the setups here, it's in, and the first target would be the 72, 73 level here, below the larger area long here, and then there's a second target in the 72.32 area. All right. So let's look at the US dollar Canadian dollar here, and then the pound for this first video. So the US dollar Canadian dollar has this 50% long, which brought price right into that first target. We saw profit taking right at that first target, so we traced this level here in April. So you know, these levels are real, and the first targets are watched by algorithms. When we get participation, you have to watch the first targets as well, and second targets. And now this market has all the potential to retest to 135.75. And I just want to make a digression here. That's one of the reasons I have a Canadian Japanese yen short. That's one of the trades I'm carrying at the moment. I lowered the stop. Just a little digression here. There was a 50% participation here on the weekly time frame, and I've entered at around 84. I think it was 83.90 here, with a stop 100 pips above, and you know, in the last week it's going down, and it's continuing down here. My target is for this trade 81.12. The so going back to the Canadian dollar, US dollar, the reason for this trade though, So was the fact that US dollar Canadian dollar has these setups on the larger time frames and hit the first target, and now has the potential to continue to do 135.76 and even go above that level into the second target, lines up with previous highs. Okay, so that's where we could see this market moving. Now, this market has moved exactly from the area that we identified last week. It was an extension long from highs to highs. It traded at the open, and look at the first and second target, how the second target lines up exactly with that area of where it starts the potential participation from shorts. Okay, so there is the potential for this market for a continuation higher here this week. And the move is already ongoing. There is still the opportunity to jump on it, get a risk-free trade, and bring price into the 135.86. So that's one of the opportunities for the US dollar Canadian dollar. And lastly, but not least, here is the pound versus US dollar. Actually, the pound is very, very weak. Last week, attempt to test the 130. 59, which was never tested, so there's still possibility for this market to keep moving lower. The similar setup that we saw for the euro also applies to the pound versus dollar here. The first high was not hit, and that leaves this market open and prone to a continuation lower. The 50% short here has not, let me trace it correctly. Let's see if this market has traded and held a 50% short here. No, that was pierced. But in any way, this market could continue lower because it has a setup short on the larger time frame here, and the first target was not hit of this larger time frame setup, and it could actually go now, continue lower and test the 130.87. All right, so this is it for this first part. Again, I want to remind you, if you want to look at some of the models that we use to model algorithms, you can go to fibstocketrading.com/free, click on the free package here and get access to the ebook, the 6 hours video course, and the signal service as well. And don't miss also the Modern Markets Trading Mastermind. It's our growing Forex, stocks, and commodity trading mastermind on Facebook. You go to fibstocketrading.com/Facebook. Also, as you're there, friend me and say hi, and I'll be there for you. Bye bye now.